Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
It was good. Just a lot of the best setups were in tech, but they also are approaching kind of overbought territory. So I think it was good to um, size down even on high confidence stuff. And I know like Snow, for example, did really well, and you didn't really need big positions to make it there. So I think the biggest thing for me or anybody else is when you are doing well, don't then think that you need to go size up on it. You just sort of stay within yourself, and um, so it's market seems too hot, but I'm not trying to time the top on it because it can just it can just keep going. So just trying to play what's in front of me.
Yeah, I don't got much for you from last week because I only traded the first day of the week, and it was probably the worst day of the week from what I noticed. Back to that low volume melt up, pretty much where we are.
Yeah,
The good days on those days are really, really good. Um, Definitely want to elaborate on what you just said about sizing up. I mean, I think that's one of my strong suits. Is I'm pretty adamant about my account size and my positioning size. Like those haven't changed since you've known me. And um, anytime I think about it, it kind of brings the emotions into it. You know, whether I want to size
yeah,
down, size up or not. And if the math problem works out for you, you just keep building brick by brick. And that's
yeah.
kind of how you got to look at it. You
And
just
right, and on the like a sector like basic materials, which I like a lot. So if I were I'm like, okay, X is probably going to turn around, FCX, et cetera. But they dipped quite a bit, early in the week. And if I had been in leaps on that and had oversized like that, those dipping red would, that would bother me, and I probably would just get out of it. And but instead, it's like, I wasn't planning my flag. I just bought a couple, and we're just going to see. I'm going to think about adding more, and then late in the week, all those took off 3%, 5%. X was 8% on Friday, which is a huge move for X. So really, the sizing allows you to just stick with stick with the plan that you had, and not panic sell, and or panic buy, or whatever. But yeah, bring whatever size you need to keep the emotions out of it. For some people it's $50, for some people it's probably 5,000, I don't know. But it just really, you have to kind of stay within yourself, and kind of control those emotions, because me, you, like nobody else, we don't know exactly when stocks are going to turn around. We just know how to find high probability setups,
yep.
and we approach them in different ways. Some you got to be quick, and it's going to happen, right then. It's going to bounce hard off this one level. Others, it's like, when we say, you know, this price is not going to last, like, lift under 10 is not going to last, or, whatever it is. That means that we're not quite sure exactly when this is going to happen, but more room above than below. And so
Yep.
you try to find your approach to position yourself accordingly for that.
No, guys like Vegan and Pele are the best at that. Well, for one, they play the share side on it. I'll just come out and say that. But
Yeah.
they will just
Yeah.
they'll marinate a position, and 2 weeks later, be like, oh, I missed that, and they'll be like, I got a piece of that because they're just
Yeah.
playing. They have that swing mentality. Um, I think since the beginning of the year, I've kind of said you could swing in this market a little bit, and I'm trying to more and more as we go along. But back to the oversizing part. That's why risk is always first.
Yeah.
Even my goal is based off risk, right? It's a 3-to-1 ratio. Well, how much money is too much for me to lose in a day? Like what bothers me? It's about $300. It's just all
Yeah.
about that, and that's exactly how you should be. Like if losing more than $100 on your trade messes with you, then that should be your sizing. Like you should size your trade so if you get there, the setups or if you even get halfway there, you know the setup's gone and to re-enter. But
Yeah.
oversizing to where uh, where you should get stopped out or where you should re-add after planting your flag and you're down $1,000, probably not any longevity in that. Just because you're not even like you're not even really trading. You're just literally worried about your money. You're more like
Yeah.
living in fear than living in logic, and you're not seeing the setup. You're not seeing any of that. You're just watching your PL because it's bothering you. So you got to make it so that 20 or 30 bucks or $5 or 20 is what it is on the loss side, so it doesn't bother you. I think Value's done a good job at that. I mean, he kind of snitched on himself a little bit. Said I had more losing trades than winning trades, but I'm ahead.
Yeah.
I met my goal for the week, and that screams just I got risk management down. I can't trade for shit yet, but I got risk
Yeah.
management down, and I'm listening to you guys. I mean, that's being a little critical, but um, it's true, and that's kind of I guess that's kind of like step one in this room is like let's get you to where you know you can do better, but you're still profitable and you're not making big
Uh,
account changing mistakes.
yeah, exactly. And I think the biggest thing that happens with um, newer people who are learning is they'll they'll just return once too often to a stock. That it makes a good move, they're out of it, and it's like I want to get back. And I've seen that with Enphase and with John Deere or whatever. Like you make a good trade, and then it's like I want to get right back into it. It's just that day, like it's diminishing returns. Like the stock, it made its one big move, or sometimes you get two in a day, and then they calm down. Especially those big ones. Those are not those are not the stocks that are just going to be wild, just jumping all over the place. Like they'll kind of set the tone for the day and then find equilibrium. And trading options in that equilibrium is just not going to work. So yeah, I think just learning to just take the win and walk away is good. If you want to stay engaged with the market, you can always start studying for what's going to happen the next day. That's what I do. I like to
Nice.
be done by 10:30 or something, and pretty much just lightly managing stuff, and then I'm you know just studying what's going on, and that is more fun than trading to me personally a lot of times. But um, it's kind of whatever your thing is. One of the pieces of advice I posted, uh, and this is just it kind of I mean you would think it goes without saying, but it's so important. Like if you're not looking at a chart, do not buy options. I mean, I like there's stuff you can buy without looking at a chart. If you're just like, okay, I'm going to buy, whatever, Apple, Nvidia, VU, or something. I buy it every week, whatever. Um, that's fine. But options, I mean, your entry is so important. Even on a leap or something. I mean, you still want to be looking at a chart. So you just have to find a way to do that. I mean, you can do it on a phone. There's chart apps on phones. I don't like doing that, but you cannot just pile into something. Even off my notes, like my notes, those pregame notes I do are kind of like this is what I think is going to happen. I think this stock's going to flush to this level, and I'm going to try a put there. But like when I'm looking at the chart and the first candle is shooting straight up, okay, that's not the setup I was looking for, so I'm not going to do that. But if you're just like on the notes, okay, I'm going to buy a put at the bell, you could be down big fast. I mean, you have to actually trade, and we trade off charts. That's our visual representation of what's happening. Um, get used to that. Learn to read charts. I never used to do TA, honestly, when I was first starting,
Yeah.
but it's something I built over time, and it's what our whole setup's about. It's about that TA and that option activity and bringing those two together. So if you want to learn, you're going to have to learn to read charts. That's a big step for anybody in here.
Well, yeah, and that's like, I mean, I can name 10 of yours off the rip. I mean, from coin to end phase, that MDB lately. I think it was MSTR there for a while. Man, the list is long. The list is really, really long of stocks that kind of move the same way in a trend, and and
Yeah.
and the setup that we like preach or what you're looking for is is basically the breakout in the morning. Like those first candle, you're not going to catch, and then you're going to get a higher low than the open, basically, and then that's
Yep.
the secondary entry. That's where you want to play. Not only shares, but I assume options.
Oh yeah,
Just
and for
because there's
options,
a sell off, and that I mean just
they're
find
cheaper too.
yeah exactly
Yeah.
and just like people want to trade so quick. They want to trade like right now instead of looking for that setup over and over again. And that's like the simple setup. That's like the keep the lights on setup. And they're
Yeah.
there every day, but they're really there every day. Snow. I mean the list is long on the stuff that you
Hmm.
find that does that every day from the option side, and that people would enter something. I mean, let's say the first 15 minutes is for you to like clear your positions that you had, check out your runners
Yeah.
that you had. That's what it's not really for buy. Maybe establish some ranges like Tupac does. So you know where the higher low will be that you want to buy your calls off of. But I don't think a lot of people see. I think they're just looking at like the last two candles. They're looking at the minute chart, and they're not really giving themselves that area to fish in. And it's gambling in my opinion. That and why they start
Yeah.
with options. Like I'm
Yeah.
adamant. I mean, I'm gonna say it 100 more times this year. But if you're a small account, man, buy something every week. We find some really good stuff, especially the big names. Just buy it once a month, treat it like a bill. Come back in 6 months and see how you're doing, and your account will be like Goose's $4 account. It may be 12 now, but if you do the math on that, that's 200%. We'll find something for you to invest
Yeah,
in.
and I think trading shares, it protects you from yourself, and that when you're starting out, that is so important because if you're just going to say like I have this account, 80% of it's going to be shares, whatever that, however I want to approach that, swings, day trades, whatever, and then the 20% is options. Well, if you blow through the 20%, you screw up. Well, okay, it's 20%, but you didn't blow through 100%, and you're not just reloading your account on your next paycheck every time. So that's kind of what we want to avoid. And then quick note on the options at open. You know, a good question that I'll ask because no one else has asked it, but is why do all these whales buy all these weeklies when the theta decay is so bad overnight? Well, part of the reason is they pump up that premium price based on that pre-market move, even if it's not a huge move. What happens is people see something up in the pre-market, or they see a few green candles are open, or red if they're in puts, and they want to chase that, and that jacks the premium up.
Yep.
You do not want to get caught up in that. And like Tesla is a perfect example. That first spike that Tesla has, you're looking at on the weeklies anywhere between 50, 75, $100 added to that premium that is based on nothing but that early FOMO. And so then the stock pulls back, just a little bit. And even at your entry price, you're already red because the option premiums kind of calm down. So you want that. That's why you want that secondary move. It's so much safer. You can use a real stop, like, so just, yeah, use that first 15 minutes to, you have to clear out of things. Or if you want to trade, I mean, just don't try to trade three things in the first 5 minutes. Just one thing. It's like, I'm looking for X to flush here. I'm looking for, John Deere to flush here, and I'm going to buy a put on that. And then if it doesn't work, okay, that was one trade. You get out, you move on. You move on with your day. But yeah, you want to be really careful about that first 15 minutes with regard to option premiums.
Yeah, I don't even think I really. I mean, I don't stare at option charts entirely too much, but I don't even think they move the same because you'll get, if you get like a 10% runner, and I'm trading shitty pennies, so it's probably hard to compare that to something like Eli Lilly or something that you trade. But
Yeah, yeah,
I get if you get a big old 10% pop or 20% pop, pre-market. Um, I'm looking for it to pull back, to the 15% mark, right? For that high or low consolidate. That doesn't
Yeah.
take there's no contract there that's dying or that got oversold and now is um, decaying, I guess the best way to say it.
Right.
And as it stair steps up throughout the day, that stock could go 100%, right? But it's going to give you three or four different levels to entry off consolidation because you have you have profit takers coming in and then new buyers coming in holding it up with the FOMO, right? Like you're saying, they see
Yeah.
something up 25%. I don't think you get that kind of movement in option charts. I could be wrong, but I don't think
Right.
they perform the same way. Like they will knife, for the lack of better terms, and then they will moon, for the lack of better terms. Um, but you kind of got to play the extremities on the option side to where you got to play consolidation on the share side. Um, and how that protects you is if you get an entry on consolidation, you usually have a safe place that won't just break. The option charts don't really have that. I mean, tell me if I'm wrong, but the option charts
No, you're right.
they don't
Yeah.
have that unless they're the bottom or the top. That's where they don't have like a middle. They don't the option doesn't start at 20 cents and go up to like 50 and then sit there for a while and then go up to 70 and sit there for a while. There's more fluctuation in those charts. Am I wrong about that, or is that kind of how most
No,
of them?
that's right. Yeah, absolutely. Yeah, and then a lot of it is is kind of stock dependent too. Like, so the out of the money stuff on Tesla, Apple, whomever, like those big ones, they move pretty well with the stock because there's so many people in those. If you're in UNH or Eli Lilly or whatever, like you don't want to be too far out of the money, because no one's really buying those, and so the stock's going to go up 1.5%, and the stuff close to the money and the stuff that like one spot out, I think is a good target usually. Um, that those are going to move really well, but the stuff that you bought because I just want to spend $70, um, doesn't go up. Sometimes it goes down, might go up $10, whatever. But you can get caught up in that too. So all of this is saying that playing options adds so many different variables.
Variables,
It's
yes.
so much more complicated, and and you're just starting out, and you don't even really know how to read a chart yet, and you're going to play options. That's I get that the profit is tempting, but um, you want to kind of learn to walk before you try to run here too.
Yeah, no, 100. I think it's been a while though, but them Riot five. Yeah, it's been a while because it was Riot 5.5s.
Yeah,
But I bought those like pretty confident. No, I mean if I'm buying an option, pretty confident. Um, but it went in the money, and then it moved. The option I had, I think it was like a month out. Um, it moved the same as the share price. And I'm
yeah,
thinking, why am I in this option that is I should have just bought more shares. So I
right,
mean, like you're like the reason I had that thought is exactly what you said. There's so many other variables that you have to deal with, and
yeah,
I don't know them. I'm not familiar enough with them because I don't trade them every day. I guess I'm lucky because I started on the share side and was successful that I never had to I guess I'm gonna say it, get greedy and go play options. Um,
yeah,
but it's a whole different ball game, and like I think you said it the best. But a there's a lot more variables. Um, to keep it as simple as I can on the share side, there's two. The stock's going to go up or down. I mean, that's
yeah,
your two
yeah,
variables. On the option
right,
side, there's probably seven. I mean, seven or eight
yeah,
different variables
definitely,
going against you because I mean, you got to pick a date, you got to pick a strike. There's all this shit going on. There's
yeah, and
fucking
there's plenty of stuff, like you know, flow read on something. There's a lot of those. Like, I don't want those options. Like Carvana, I have no interest in Carvana options because the implied volatility is always like 300%, and that's just not a place I want to be. Same with the regional banks, and then so someone might hear,
AI's probably like that too right now.
oh yeah, yeah, AI. Like we had someone do a lotto on AI puts through earnings. We all said it was a bad idea, and even though it worked, it was a bad idea. And why is that? Because you're putting up 1,200 bucks, you're winning 1,600, your downside was zero.
Yeah,
So
yeah,
that doesn't match. That doesn't match. Your 3 to 1. It's the opposite direction, right? So and the reason for that, and he didn't understand why he wasn't making more money. It's because the implied volatility drops after the earnings are
yeah,
over. So that isn't that's why playing the earnings after for options is so good, because you're taking advantage of all those people who just got destroyed trying to play earnings. And then they're cheap, and then your risk is $50, and you can get 300 and lose 50. Maybe, well, you could get out, um, but you want it in your favor. You want other people's mistakes in your favor. That's the thing about options, is this like a zero sum game. Someone's going to win, someone's going to lose, and that's why you want to get closer to the bid. You don't slap the ask on stuff. And again, I could go on and on, but there's so many complicated things happening, and at least make some of your account, even if you're wanting to mostly do options. Do one or two trades with shares off our best setups, and you watch it go up, and you start. It's like, hey, I like this. There isn't the stress there. Um, the setup's stable, and you kind of go from there. So I really encourage people to do that. Look at shares.
man.
And this is
Trades,
from an option guy.
yeah, trades working are the death of option traders. Like it
Oh yeah,
worked, it
yeah,
worked, so I can do it again. Is like one of like they not seeing the fire that you walked through and got lucky for minimal gain. Um,
yeah, yeah.
it's
That's about
probably
to happen to
go ahead,
people who've been just spamming calls every day. That's about to really come back and bite them
come
too, I
back and
think.
get them. Yeah, yeah.
Not that I'm predicting some big crash, but we're going to get into an era where actual pullbacks happen.
Let's
And
let's do that
and
then.
we'll get into that.
Let's hop
Yeah.
into SPY here real quick. Um, what we got last week? Oh yeah, 416, 428 close. What do you know about that? Uh,
Yeah. That was good.
I had 416, 428. So didn't have the 430 touch. You were 425, 415, 14. Sorry. So you were a little broader than me, but a couple bucks under. Um, of course, I win on the week. I'm not here. Um, how do you feel? What do you feel about the? Let's just talk about that before I predict. I'm definitely going to go first.
Yeah.
But what do you feel about this 430 test we kind of ran into here?
Yeah, I think that on the option side, they weren't ready to break 430. And so I think part of the reason things stalled a bit, toward the close, and we didn't ramp up into close, is that they weren't quite positioned for that. So, well, while I think we could definitely break that this week, it there's definitely some unwinding that was happening on some positions, and kind of explained why the close on Friday was a little more quiet than we've been seeing. That's kind of my take on it.
Perfect. I'm just a TA guy. It's what the chart looked like it was gonna do. That's all
Yeah.
I got. I know I call him the Big Sevener. That's what I'm the line I'm picking up from the talking heads. Big Seven kind of holding up the market currently.
Yeah.
Um, just kind of is what it is in that regard. Oh, I'm not gonna go that way. What are you doing, idiot? Um, yeah, they're just kind of it's kind of holding up the market. Eventually, we're gonna get volume back. That's the linchpin for me. Is the like the shitty names aren't being played because there's no real volume in those names. There's only volumes in the bigger names. People are still thinking those are safer. There are the
Yeah.
5 and 10 year buyers. What I told people to do at the beginning of the year with Tesla, if you like the stock and you're gonna hold it for 5 years, it's a great time to buy it. That's where people are right now. I mean, and they're only buying seven things. The majority of people are only buying seven things. I do think that changes. That'll be in my debt ceiling talk. Um, but as far as SPY
Yeah.
goes, I think 420 is it's going to be huge on the downside, and it's enough down from this 428 for me to call that my bottom. And then 32 is our last doji over here, so I'm just going to say that's going to be the top. Well, 31.73, but 32 will be the top for this week. I'm not really leaving myself a lot of room, so that's kind of a consolidation week. 28 to
Yeah.
32 is a $5 SPY week. That's a really tight candle with more downside than upside, but that's kind of what I see this week. Um, just not a lot of news this week. Not a lot of big action going on. And if there is stuff coming out, I don't think it's going to be the greatest. So, yeah, I'm going to go 432, 420.
All right. Yeah, that's pretty similar to my impression. The so basically we're sitting here. The August high is right around there. It's like 431.82 or something like that.
Yeah, that's
And
yep,
so
yep.
so it makes sense that we would test that. I think I'm not gonna totally Bob Barker you. I'm gonna say we get a little bit of a wick above that. I'm gonna say 434. And on the downside, I got 422 downside,
Oh
and
wow,
that's just
okay.
based on some midweek strikes I see.
So we're kind of similar to last week, but you're on the other side this week. Interesting.
Yeah,
Interesting.
and it's only because of a perception and a sector rotation I'm seeing where SPY has some pretty big healthcare names in it and oil, so I think that those might help stabilize it as if tech pulls back a little.
We're at the first of the month. I got a new not challenge, but a new funsies for us here. Um, first week of the month. What's spy start next month at?
Oh wow, nice.
that's
Oh man,
that's a good one, huh? That's a good
that
question.
is, yeah, yeah,
So we're gonna be we'll be through the rates, right? Because we get rates again this month,
yeah.
correct? So we'll be on the other side of that.
Say
Just a big window, huh?
four. I'm gonna say 410. 410.
Really?
Yeah.
Okay. 410. All right, I'm pivoting my number just a little off of yours because I don't want to sound hopeful, but I'm gonna go 435.
Nice. I'm glad we got the opposite view here.
Yeah, I was gonna go 40. I was gonna go
Yeah.
40, but when you said 10, I was like, I'll take five off of that. Um, but that's still a big range. But um, what
Yeah.
what
Yeah.
what are you seeing to? I'm more of a sideways from here. Minimal up. What are you seeing that takes
Mhm.
us down, or not down, but what I mean back to
The
where we were 2 weeks ago?
um, I think some of the whole the hawkish pause. The I think that we might start to get a negative reaction to some of what's going on with the Fed. You've got Apple at all time highs. You have by where we were kind of before the rate hikes ever happened. So I think that as volume comes back, I think it might be sell volume. That's
Okay,
kind of my take on it, and that the Magnificent Seven. I I think if whales go for the exit at the same time on a lot of those names, it's going to give us some significant days down. And so that's sort of just my impression on it is that the breadth is going to improve, but a lot of that is going to be the big tech coming down and
coming
kind of
back down.
meeting in the
Okay,
middle,
okay.
and then we move back up from there. That's my take.
Sure, sure. That stair stepper that we kind of said was going to happen. That slow growth. I'm surprised where we are now because I thought it was going to be a lot slower throughout the year. Um,
Yeah,
so
yeah.
so my overall thesis definitely sees that. I just see that we're done with the rates, and I said that last rate hike. So the only thing that
Yeah.
could happen there is the pause that would move the market, and I think it does it in a positive way. I don't think the rates can be negative. I mean, it can for the day or two, but I think overall the market's and I've said this for what 6 weeks now. This market wants to go up.
Mhm.
It's just there's not a lot of sellers in the market. Um, if the rates will give relief to more of those companies that are struggling. Um, so I just think we kind of continue to melt up. Um, through the month. I really just see this trend that we've been on for 2 months continuing. The sideways number for me though is 440, so I think we kind of sit right below that. I think that will be hard to
Yeah,
break, in my opinion. Um, Kind of to rotate over the spy conversation to some regular notes, the biggest kicker for me, and they correlate a little bit, is the way the debt ceiling was wrote. They still have to go through all the appropriation committees and like ratify that bill. So that's not they're not completely out of the water, and the winners and the losers aren't completely defined yet. Like the ways and the means have got to go through and say, all right, here's what we're going to do with our budget, and defense has got to go through and say this is what we're going to do with our budget, and then that all has to get agreed upon under the new debt ceiling thing. So basically, they were,
yeah.
the individual 11 committees are told this is your parameters how we have to cut money out. Now they still have to do that, so there's not a lot of meat and potatoes in this 90-page thing they just put out. It's just an agreement that we're gonna clean up our 11 different areas, and as that comes out, I think that will move the market um, back into the
Well,
sectors,
yeah,
back into the
absolutely.
sectors that you see, like your metals, materials, your solar, that kind of oil, that kind of stuff. There's going to be winners and losers again, and we haven't had that. We've just had the big seven. So I think that's
And one thing that pretty clearly happened in copper and steel was just the getting the bill through took the handcuffs off, and they all moved up. And then sort of the trend is going to be defined by, I think, by what specifically comes out of this. And I think overall for copper and steel are in really good shape to move up. Solar, I'm a little bit hesitant on because I think it sort of is something that could easily be targeted as part of a compromise where it gets some negative news. And
yep,
that's why like I said Enphase looks good. I didn't want people to just take that as like all solar is a go signal because I don't think that's what was happening. That was that particular stock, and I've watched like First Solar just sort of sit around the 200 level, not doing much, which is not typical for that stock. So a lot of it is kind of wait and see, but there's a range within that
some of
you
it's
can
tradable.
play.
Yeah, yeah.
Yeah, but like steel, copper, like all those, that was more of like a go signal for the sector when those all started to move. So it's just different. And then
Yeah,
gold. There's
I
there's no legislation about gold, but
yeah,
gold is going to react too to what's going on, financially with the country and the dollar and all that too.
I was pretty well, what's I don't know the right word. You're the professor. You're gonna have to trade it for me, but I was pretty over the top though on my solar comment over the weekend
Yeah,
for on a reason.
yeah, yeah.
Like those charts aren't good. Like leave them alone
Right.
unless you know the damn chart. I mean, I know you do, but like
Yeah,
people like, should I just buy in phase and hold on here? It's like, bro, you should have been riding this bull for like the last 4 months, and you should have this bull figured out on how you can make money off of it, or if you can or you can't. But like entering it right now or trying to learn it right now, that there's so many better charts that you find. It's just a continuation of your work
yeah.
for the
And
people that have been there.
well, and Enphase was such a textbook example of the 3-day rule that we talk about, where had that huge drop on earnings. And so what's my target for an earnings drop like that? It's the middle of that daily candle, but it did more. So it went down a few more days, and then was under 160 for a while. My target's been 180, and here we are. But it took a little time, but had four really strong days in a row. So I was just I was kind of waiting for Enphase to wake up, and it did. But Enphase getting back to $180, I mean
The
like
move.
that was the floor I
Yeah.
talked about at the beginning of the year. So where it's still kind of uncertain, we could reject there and head back down too. So it's not all smooth sailing back to 275 or something like that.
Yeah, well, yeah, you just applied another skill that I mean, you took a chart you knew that flushed and played
Yeah.
played the relief, and that's completely different than when we were playing in phase at $300, right? I mean, it's a
Yeah,
completely
yeah, yeah. Or
completely
in
different
that
setup.
Like you can go back to my tweets on it or my notes where it was like, at 202 you buy calls, over 220 you buy puts, and that it went on like that for months, and then earnings shook things up, and now we're in
Setup.
a different setup. And what I'm looking for is to get back into that zone. And it's the same deal with Macy's. It happened with Lemonade.
Yep.
A bunch of them, they get well below our price. That doesn't mean you just pile in, but what you're looking for, you can trade it up to that attempt to get back into your zone, and then you're just gonna, trade it like you used to. So
Yeah, eight
that's
four.
kind of where experience comes in.
840's back on the list this week. It's a
Yeah,
prime example of that. Um,
yeah, yeah,
you said you want to talk a little bit about ERs before we cut out of here. What do you got on there?
yeah. So the what you saw was Snow, Willow, and what I think might happen with S, although S is a little different because it's smaller, but is when you do get a big drop on earnings, that no matter they guide down, and you see a lot of problems and all that, but there's a lot of kind of forgiveness that happens in tech, and a lot of it I think has to do with the fact that most of these are actually they're beating on earnings, at least partially,
Mm-hmm.
and then they guide down, and the guidance is what brings them down. But they're able to pretty quickly recover from that. And then when it also lines up with, Snow fell to a level that we were very familiar with from before it had this big run, and so then things lined up for it to bounce. Twillo and Net, kind of the same thing. Twillo is now well above my line at 64, after having fallen all the way to 45. So that was a kind of extreme example. Net was the same thing. So that's a pattern I think you want to continue to look for in tech. MDB did the opposite. It just took off. We talked about that last week, that given the makeup of that stock, an 80 or 100 point move can happen, and that's essentially what did. So I would continue to look for that in tech. And even if we're not talking earnings, if we're just talking like it has some big pullback, that I still think that you want to be looking for the upside, and
Yes.
especially off of levels. So like Twillo can go ahead and pull back now, and it's going to pull back to levels I know about. So that's when I would look to re-enter. And then on the flip side, like Dollar General, anybody who has products on a shelf, the market is not as likely to be forgiving.
Yes.
And they will recover. Like I think Dollar General in the 160s is a pretty good buy. You could buy shares in that, in 10 years from now, do very well. But that recovery is not going to be as rapid, and it's going to have more hiccups. And so any kind of attempt, like I wouldn't swing these. You can day trade them, but I wouldn't swing those. Whereas Net, Twillo, ones like that, those were great swings. And even though those companies seem riskier, it's an environment where they're not dealing with shoplifting and products on the shelf, and backlogs in their warehouse and all that stuff like that. So exposure to the consumer is where the risk is in the market right now, and that's how all these funds and whales and whoever are doing that. So there's a lot of context involved in how you want to approach these earnings, and that's something I think that we'll address, but it's something you want to look for in our notes and our commentary, and it's a good thing to ask questions about too.
Yeah, for me, it's a two-way to play it. Like, and they're both the same. They're just on the other side of the coin. I mean, either you're playing the run up, which you need to be a week or two early, and you're still looking for something that's oversold, that has already been trending down, that can recover, or you're waiting for the report to come out and it get oversold, and then you read the report, see why it was sold off, and then play that. And I'm with you. Stores like Foot Locker was the example I'm thinking of that you didn't mention. Um,
Yeah,
yeah, the chart looks like the ones we're talking about, but if you read the report, it's all inventory. Like they're having issues on that side. You're looking more for like the PLTRs the ones that are saying, "Hey, we're going to be profitable here in the next quarter or two," and then I guess making a bet that they got it right, and that's just the better play. But you still have to do the work. Um, in general, I don't know how else to say it. If you're not a guy that likes to look at charts or put in work anyways, just stay away from ERs. Is adding another variable, and it's a
Yeah.
multiplier. It's a multiplier. It's not just an add addition. It literally is a multiplier, and you see it with a lot of charts where you get um, not outrageous moves, but you get pretty directional moves usually in the after hours or pre-market. So you don't even have
Uh,
control on the option side.
yeah, yeah, and I mean, and so okay, so so MDB is kind of a good example. The same sector as snow. Snow dropped 20%. MDB went up. I think like it topped out at like 30. It went up 36%. I mean, who can anticipate that? I had it on my list as a big move, but I even said that my caveat was that the big move could be down then up, or it could just be up. So that's a range of. I thought it could have dropped to 220, and I thought I 360 was actually what I was thinking. It went beyond that, but I mean 220, 360. Like what are you going to do? Are you going to buy a put and a call at those strikes and spend $500 and just sort of pray it doesn't go in the middle? That's not a tradable. That's not a tradable setup. Those percentages are exciting to look at, but that's not a sustainable approach to doing this. But this is a great thing that happened for MDB, and I'm not necessarily looking to enter calls up here, but it shook up the stock. We're in a new setup, and it does have history up here. So now we start to look into that.
That on that one, I would hope people would have traded that off of that 220 with you in that
Yeah.
220 250 range for the better part of 2 months, kept a runner and got paid for it in ER. That's the perfect trade,
Yeah.
in my
Right. Even
opinion.
like how about a share? If you
Yeah,
bought a
that A
share at
share.
220, you're like it's in the 376. That's pretty good return
Well,
for one share or
if
something.
you were playing this at the beginning of April though, and you were playing July contracts, right?
Yeah. Yeah.
You're if you still have one or two of those, you're doing okay. And that would have been a free
Yeah. Oh yeah.
position. That would have been a
Exactly.
free position from playing that. I mean, I hope you would have got out by now, but
Yeah.
that would have been a free position for you. And I think that's the better setup. Like they have ER in 2 months. Let's play or a month. Let's play 2 months out and build a position so I have some frees going into ER.
Yeah, exactly. And with what I was talking about with tech being like forgiving, like let's say that you had August calls for snow and you kept one. Well, earnings destroyed it, but it's already back.
Yeah,
it's already back like 4 days later. So if you even if you did keep it and you're like, well, oh, I know this is down 50% now. That sucks, but it was free, whatever. I'll just see what happens. Well, it recovered by now. So, but if you did weekly calls, those were
smashed.
just gone.
Yeah.
So that gives you an impression too. I mean, yeah, you're not going to get the 2,000% gain, um, but 2,000% gains, that's just gambling anyway. So that's not trading.
Hey, for me, that's disrespectful if that's what you need because you, whoever deliver strikes daily that gets you
Yeah,
30, 50% every day. So if you can't do the work and build brick by brick, if you need it all at once, um,
yeah.
it's kind of, I don't know. It's almost like you don't trust what we do here. That's one thing I love about value. But that boy just takes his 30, 50% now and just moves on to the next one. Um,
Yeah, yeah, yeah. I mean, that was like I do get. I'm not mad like quickly or anything, but like when someone says like, if we go into a recession, is all your work invalidated?
that was
I'm
my
like,
favorite.
like, like what? I mean, no. I just I adjust to what's happening. I'm constantly looking at this. I'm not. I don't have that just that arrogance to say like this is what's going to happen 6 months from now and then just stick to that. I adjust my targets to what's going on, but the trading on macro, has destroyed a lot of people this year,
Yeah.
because they're, I mean, things do look bleak, and daily life for people is kind of bleak, and groceries are too expensive, and whatever. But the stock market has sort of looked past all that, and that's sort of what we saw for the move here too.
Yeah, you got me for them 6 months out prediction. That's what I'm here for.
Yeah.
Perfect. We're about 45. You ready to get to work, or you got some more here?
uh yeah, yeah. So I'll take a quick break, and then we'll start
Perfect.
the second half.
Perfect.